Welcome back to this very special Mahura trading session once again on behalf of CNBC TV 18. Here's wishing all our viewers a very happy and prosperous Diwali. We have Sameer Arora, founder and fund manager of Helios Capital, who joins in all the Diwali festivities in the market. Sameer, happy Diwali to you. How has the year been for you, and how have all the card parties been in Singapore?
Actually, because I consider that my stock market is enough of a gamble in some sense, I find card parties extremely boring because the stakes are so little compared to what we do every day.
And you get your fill in the market, is it?
I get, but the scale is different, so now I don't like the playing for $5 anymore.
And what have you been doing with your money these days? Have you put in a lot of money lately in the market?
Lately, because our net exposure is around 60 or 61%, which used to be 70% maybe 2-3 months ago. So, but in general, it is more at a longer term average rather than being extremely bullish at this point. And now we have this issue of Donald Trump having had his prospects improve. I think this week will be very, very interesting. But in general, forget about this week. But in general, I think market is good, but it's not a mind-blowingly super time to invest or something. It's a good market as we broadly believe that market should be, rather than feeling that this is the point where suddenly our world will change, which I hear many guests saying. I don't think the world changes so easily for us. It's generally a strong, good market, has been for all my life that I've been investing, which is since 93. Other than having 1 or 2 massive episodes, which also you can recover from in the next 1 or 2, 3 years. So it's okay.
Sameer, hi, happy Diwali, and good to have you on the show. So obviously you're sounding a lot less bullish than you were, say, about 3 or 4 months back. Is it just because of Donald Trump's prospects improving? Because the markets haven't moved anywhere in last 3 or 4 months.
I was very pleasantly surprised and very happy that Udayan Mukherjee said that our market has gone nowhere and we should look at the index. I totally agree with that. Look at our index, it has done nothing. What a great thing, because actually everybody has done better, broadly speaking, because they have a mix of mid caps and large caps and some small caps maybe. So if you look at the index, it's very, very satisfying because everybody, all the fund managers would have normally beaten it by a big margin. And secondly, we can tell the world that, see, you have missed nothing by not being here or having not increased. So it's a great time. I totally agree with all that. I just feel that the difference between mid cap and large cap is too extreme. It doesn't mean that large caps have to do better. It broadly according to me means mid caps have to slow down or their outperformance has to be moderated. And therefore, I think that next year our outperformance against the benchmarks, which has been very, very high for the last 3 years in 14, 15 and 16, would not be that much because this mix will not work in our favor.
Okay.
As much.
Okay, so we stay on with us. We have, of course, another special guest joining us in our studios. SP Tulsian is also with us. Ms. Tulsian, good evening and happy Diwali to you and your family. And thanks a lot for being the channel's friend all through this Samvat. And of course, we hope for our viewers, we hope that you'll bring much more prosperity in Samvat 2073 as well. Your thoughts on how this Samvat might pan out? Again, a stock picker's delight?
See, Anuj, firstly, let me wish all our viewers happy 2073. The coming Samvat, I think, will be more profitable than what we have seen for. Maybe on an index level, 10% gain. I'm talking on the Nifty. But if you have, because I've seen the data and all that, 20% gain on the maybe mid caps index, small cap index. So yes, this is a stock pickers market. And if you want to outperform, see, maybe the compulsion for the institutional investors will all be different. But for the small investors or one who is a mid-sized investor, I think there are a lot of opportunity. The kind of, now there are 2 pockets which is existing. One is India and there's this rest outside India. You have ample opportunities in India. You have many problems or, headwinds which are seen, in the external markets, which may cause some trouble or maybe big trouble to the IT biggies kind of things and all sort of things. I have heard Udayan, I have heard Ramesh Damani. In the IT, you just, cannot paint all the stocks with the same brush. IT biggies will definitely be facing the problem. But those who have a specialized, foray or focus on the maybe cyber security kind of things will do very well. So yes, the stock pickers market will continue to remain, and I think 2073, even on an index level, I won't be surprised to see the return of 12 to 15%. So 2073 will definitely be more profitable scene for the viewers and for the Indian markets.
Yeah. Okay, Mr. Tulsian, happy Diwali. I'm going to come to you and ask you about some stocks as well, because you're the ace stock picker. But before that, Samir, you raised a very interesting point about how the market returns so far have been pedestrian, not just in the year gone by, but in the last 2 years. Why do you think that is? A lot of experts tell us it's because there's hardly any pickup in the economic cycle. Will this be another year of very slow growth in the capex cycle, or do you think things could now pick up at a faster pace?
By the way, I must say that we all love the fact that the market has not gone anywhere as defined by the index, because mostly the large cap index broadly, because that I think since January 14 would be up less than around 20%, whereas any normal fund would be up maybe 100%, at least ours has been, or broadly many have been. So generally it all looks very good. I just feel that this difference cannot continue. It has been very, very easy by being in slightly away from the large caps. And that issue is the same. You're right, that basically the large caps were affected by either commodity prices or global companies or high leverage or lenders to commodity companies like state-owned banks, etc. And so today I would think that still the large caps will underperform mid caps, but the extent of the outperformance of mid caps won't be as high. That's what I think. So it's not that I think the large caps, at least if we define large cap as only the index. Because if you look at many of the companies that have done well, we still call them, because they're not in the index, as maybe in some mid cap index like Bajaj Finance or Bajaj Finserv. All these are massive companies now. So if we consider them large cap as they have become, then actually large cap performance has been very good. But we are talking about the index where these things don't exist.
Okay. Samir, before we let you go, our viewers would want to know, what are you betting on? You may not want to give a stock, but any broader highlight that you would want to give our viewers?
Another highlight I've realized over time is that it is easier and you have more conviction in things that you don't do. Because if you suppose you want to buy a stock, you may look at 10 factors and still not be satisfied that these 10 are enough. But to reject a stock, we need even one factor. And all I can say is that many of the stocks that have gone up this year, if somebody were to just look at their 5-year and 10-year history, you will find that and this happened even in the bad debt, where large companies have had bad debt. I mean, you can see that those companies were the same guys, same promoters that basically defaulted and made every creditor lose in the 90s. It's the same thing in, I think, tens of these companies. If you were to just look back 3-4 years and see what they did, I think it is embarrassing that people and institutions forget because the stock is up. So I would say find few points to reject, and if you can't reject, then you buy the stock. But in some of these, prima facie, I think that the history is super bad and things don't change just because the price went up.
Okay, Samir, it's Diwali today. You can be a bit more cheerful than you are. So I'm going to...
No, I'm very cheerful. It's just my new strategy. That to reject, and what you can't reject, you buy.
We're not used to such a cautious Samir. So I'm going to let you go now and do whatever you do on Diwali. Happy Diwali to you and your family. And we hope to see you very soon again on our channel. Thanks so much for joining us. But by the way, our colleague Nimesh Shah is also in his Diwali finery. And he's in conversation with another market guru, Ramdev Agarwal. So Nimesh, over to you.
Thanks, Sonia. So I'm at the Motilal Oswal headquarters, and joining me now is Ramdev Agarwal. To me, in two sense, he's one of the finest value investors of this generation. Mr. Agarwal, thank you very much for joining us. We keep talking and asking you about market outlook, stocks and everything. Yeah. Before I ask you about markets and stocks, one thing that you've decided to do from this Diwali to next Diwali, either for yourselves or for Motilal Oswal Group.
Yeah, so let me wish all the viewers a very, very happy Diwali and a prosperous New Year in summer 2073. Coming to your question about, see, we keep reading things every day, you know. So I just read something where it says that 2x2 matrix, whether you want to be right or wrong, whether you want to be following the consensus or non-consensus. So if you want to make a lot of money, you have to follow the non-consensus ideas and put disproportionate money. What happens is that the old elephants who are very popular, very good, bluest of blue chip companies, they get disproportionate allocation in their portfolio, and the young, or new companies which are very good, they're growing at 40-50%, 60%, but they get 2-3% allocation. So how I can, my real challenge during the year would be to how do I twist the allocation, 2% for the elephants and 8% for the new ones.
Okay. I'm sure all the viewers will be itching to know. Yeah. Have you identified any new entrant into the Focus 35, which has been your core fund that you manage?
Yes, I mean, this is a continuous process because we are always fully invested, and we have 18-20 stocks, and we don't it is not an everyday game. In 3 months, 6 months, one idea we get here and there, and now wonderful IPOs are coming, so we have a lot of ideas lined up if the IPOs get listed at reasonable prices. But I think more recently, I'm at liberty to disclose because the trade has already been done. So we have bought a good chunk of Ratnakar Bank, RBL. Yes. We bought it in Anchor, we bought it in the IPO day, we bought it after the first quarter result. So it has been a very good experience. But just because the stock price has moved by 30-40 bucks, that doesn't mean that anything has happened. Sure. I think the journey is long. It is going to be a lot of hard work, and whether it matches up to the new private sector banks which we have seen, whether it is an HDFC, whether it is an IndusInd Bank, Kotak Bank, I think that's the hope and dream. Whether it works or not, only time will tell.
I understand, you feel RBL Bank is the young HDFC Bank according to you. Is that something that probably will mature over the next 4, 5 years, 8 years?
Yeah, the opportunity is much bigger. Sure. Value migration from PSU banks to private sector is on, and it's a wonderful team. They have everything going for them. Opportunity is very large. Now, whether the management puts their head down and whether they deliver to what people are aspiring, people like us, we are aspiring. I think it takes time. Even for the management, they also need to get success, and then success builds on success. So we hope that opportunities on their side.
Sure. Yeah. In fact, Mr. Agarwal, I'm joined by a very close friend of yours.
Very special person.
Very special person. He's Mr. Jasmeet. And the interesting story is he's the man who actually told you this idea of Eicher Motors 600. Yes. Can you just tell us the history about what he suggested and what clicked you to buy Eicher at that point in time?
My dear friend Jasmeet Singh Chandok, we walk together in the morning. So he wanted, he's in automotive trade. He told me that Ramdev, why don't you look at Eicher, because they are likely to do very well. Okay. And then from there we started the research. We went to visit the plant. By the time I bought it, it was already 1800. Okay. Just in 1 year. Okay. And then we have seen.
But now it's 25,000.
It's now 25,000.
And you're still holding to Focus 35.
Every single share I bought so far is all with us.
Okay. Yeah. Okay, Mr. Chandak, if I can ask you, because you've been from the automotive industry, yeah. What's the outlook for automotive, especially the auto stocks, in the near future, both auto ancillary and the large caps?
No, I think it's a very good future. With the economy going to grow now, the first sector which will get the benefit, of course, will be auto component and the auto industry first. So I'm sure we have a good way forward coming up in the auto component.
All right. Mr. Ramdev Agarwal, Mr. Sumit, thank you very much for joining us and sharing the insight. And I'm glad that you've given one idea to the retail investors today in terms of Ratnakar Bank.
Don't pile on at any price.
Sure,
we have to be very careful. And I think it's going to be a wonderful year. This summer 2073 is full of promises, and I'm sure we are going to have a good time.
Thank you very much, sir, for joining us today. You heard the bullish view from Motilal, from Mr. Ramdev Agarwal himself.
Okay, Nimesh, thank you. Happy Diwali to all of you. And that's not just a market veteran, but someone who inspires the market veteran. So we are fortunate to hear from them as well. We'll take a short break, but when we come back, it'll be time for our market walas to join in. Our technical gurus, Ashwini Gujral, Mitesh Thakkar, and Sudarshan Sukhani are waiting by.